Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In this video I'd like to look at our Wave 3 variant of our normal TS1, TS3 and TS4 trade setups, where we're looking to trade the Wave 3, which is the strongest and longest wave in a completed 5-wave sequence. As such, this is my one of my favourite trade setups. But before we get on to the analysis, let's just have a look at our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken. They're just shown for illustration and trading purposes only. Remind you there's a risk of loss in trading and investing. Or put another way, all professional traders know and understand, but more importantly accept, that losses can and will and do unfold. This is important. There always will be losses no matter what trading approach you look at. Right, let's just minimize that down. Let's have a look at a chart. Right, the setup I want to look at is, you can see on the chart here, this is actually a 15-minute chart of the ES on a 24-hour chart, and it's our Wave 3 variation. Can you see here? It says TS3, Wave 3. So rather than being a normal TS3 setup, which is off an ABC correction, if I zoom in a bit and I pull our Elliott Waves on here, you can see we have an ABC correction into there. So rather than being just a normal ABC correction, we are labeling this as a special correction and anticipating the move off this as a Wave 3. So what makes this special? Well, if we have a look at our major pivots, so I'm just going to put our major pivots on, just make them a bit fatter there, put them on. You can see that we had a low here. We had the initial move up. In Elliott Wave terms, this would be a Wave 2. We had the initial correction down, which in Elliott Wave, the initial move up in Elliott Wave terms would be a Wave 1. Then the initial correction down in Elliott Wave terms would be a Wave 2. And then after a Wave 2, we then anticipate, if I zoom out a bit further, a strong Wave 3 swing. So if I put the Elliott Wave major on here, you can see this is the count we're actually looking at. A Wave 1 as the initial move, Wave 2, and a Wave 3. So how can we then decide that this is actually coming in as Wave 3? Well, ideally we're looking at the start of the sequence. Remember, we use our isolation counts, or our Elliott Wave counts in isolation. We do this because markets go through in cycles. So what we're looking for to start the sequence, we're looking for support on a higher time frame, support and resistance. So for this we go to a time frame between 3 and 5 time frames higher. So as this is a 15-minute chart, I'll go out to an hourly chart. Right, now what we're looking for is, I'll just take the major pivots off because that's just going to confuse things a little bit. What we're looking for is support or resistance coming off a DP support zone from a previous pivot. So there was our previous pivot. Right mouse click, do decision point. Remember, these levels are on the chart in advance. So this would have been here before the ES actually got down to that level. Let's have a look at this on the time frame we were actually looking to follow and see how that looks. So here, can you see how now at this particular low we had support at our higher time frame support zone? So in other words, this said that this low was an important low, and therefore the initial move off this, which is what we had here, would then be considered a Wave 1. So now when we put our pivots on, we can see how this now looks. I'll just put the Elliott Wave on here, Elliott Wave intermediate. So here we had the ABC correction, but can you see how that ABC correction, if I zoom out a bit and now do Elliott Wave major up to the top here, can you see now how this ABC correction here unfolded as the first correction, or the initial correction after the initial swing off an important high or low, or in this case Wave low. So in other words, this is what we're looking at to be a Wave 2 correction. So the Wave 3 label there is telling us that we're then looking to try and trade, or trying to follow the targets here as if it was a Wave 3. Thus we're projecting that Wave 3 is going to unfold. So I'll just take these pivots off and just show you the analysis and show how this looks. We'll take everything off here. So when we right mouse click, let's go back here, we right mouse click over this blue buy bar, we do the analysis. So can you see how now, rather than our target being the first WPT zone we have here, if I zoom out, our target is actually all the way up here at our typical wave 3 WPT, and you can see the actual ES has just reached this level here. So this is what we're looking at, and it's why it's nicknamed a W3 or wave 3, because we are looking to try and anticipate that the next swing is going to be a wave 3. So why is this my favorite trade setup? Well, in Elliott Wave terms, a wave 3 is usually the strongest and longest in the completed 5-wave sequence, and therefore has the potential to have the largest profit in relation to the initial risk. Remember, we use correct position sizing, so in this case we are looking to trade less than 2% of a sample $20,000 account. On the entry and stop here, that would mean going long 2 contracts. Remember, losses can and will and do unfold, so if you get a loss here or a losing trade on this particular setup, it'll be what we call a -1R or a 1 risk unit loss. But the reason I like these Holy Grail trade setups is when they unfold, the profits are large, but not just large in dollar terms, but large in relation to the initial risk. You can see this trade here has now just hit the typical wave 3 WPT, but the profit was an absolutely massive 17.5, or just over 17 times greater than initial risk. So this is why we've designed this particular trade setup. Is first and foremost, it's designed to trade the wave 3. Why do I like that? Well, the wave 3 is normally the strongest and longest in the completed 5-wave sequence. As such represents the potential to have the largest profits in relation to the smallest initial risks. Remember, there always will be losses, so the losses are kept small, and that's why we use correct position sizing. So again, this is what we're looking for. We're looking for support at a higher time frame DP support zone. The initial move off that we then define as a wave 1. The initial correction, which subdivides into a ABC, minor ABC, would then be defined as a wave 2. We're then looking to trade that as if it's a wave 3. That's why we have this W3 in brackets here, because this TS3 buy setup is not just a normal TS3 buy setup, it's a special one because it's coming off major support and it's the initial correction after the initial move. Therefore, this W3 or wave 3 label here is telling you that we are anticipating or projecting that we're looking for a strong wave 3 swing, and as you can see, that's exactly what's just unfolded on the ES here. So this is a new trade setup we have in our MTPredictor 8 version, and also in our latest add-ons for NinjaTrader 7 and NinjaTrader 8. The variant, this W3 variant, comes off TS3 setups and can come off TS1 and TS4 setups as well. But it's a particular variant of our trade setups where we're looking to trade the wave 3 swing in a completed 5-wave sequence. So there you go, an example of our new W3 trade setup in our MTPredictor 8 and NinjaTrader 7 and NinjaTrader 8 add-ons. And as you can see, it has the potential to produce some very nice trades where we're looking to catch the strongest and longest swing, which is the wave 3 in a completed 5-wave sequence, for the largest potential profit for the smallest initial risk. Here is another recent example on a 240-minute chart of the British pound US dollar. You can see here that we were coming off high time frame support off a daily DP support zone. We then had the initial move up. Remember, we're not looking for sell setups because we're coming off high time frame support, plus our MTP trend colored gone blue anyway. So the setup we're looking for is this TS1 W3 or wave 3 setup here. So if I place the analysis on the blue buy bar there, right mouse click, do analysis, you can see this is what unfolded on the British pound, with the market going up nicely to hit the typical wave 3 WPT target area there for a profit of just over 10 times the initial risk. Remember, we wouldn't be looking for sell setups on the way up because we were still looking for this long trade off this TS1 W3 setup. So again, that's what we're looking for. We're looking for support on higher time frame support, higher time frame DP support zones. In this case, on the daily, the initial move up would be qualified as a wave 1. the initial correction down, which subdivides into an A, B, C, be a wave 2. That then sets up our W3 trade setup, which then looks to trade the wave 3, and as such we're looking for the typical wave 3 WPT as the target. Again, the reason this is my one of my favorite trade setups is because the potential profit when they unfold is large in relation to the initial risk. The example we showed earlier on the ES was a very good trade indeed, and as you can see here, this example on the 240-minute British pound, in this case using our NinjaTrader 8 add-ons here, was a profit of just over 10 times the initial risk. So that's an outline of our wave 3 variant of our standard trade setups, so which is designed to catch the wave 3 swing in a strong move.